All right, President Trump recently made a statement that he believes the Dow Jones Industrial Average is going to double by the end of his term, which is around 3 years from now. All right, so he's saying it's going to go from 50,000, which it just broke, pretty historical event when the Dow Jones broke 50,000. But he says he believes it's going to go to 100,000 by the end of his term. That's a pretty bold prediction. Let's dig in and see what we think. And more importantly, how we're going to trade the market going forward to take advantage of this scenario. All right, let's get started. All right, let's just start out with what Trump said, right? Last Friday, that was last week on Friday. Trump came out and he made a prediction, right? He said that he predicts the Dow Jones going to cross 100,000 by the end of his term, which is roughly 3 years from now. So he's saying the market's going to double in 3 years. Is that possible? Well, in order to double in 3 years, it would have to go up on average 26% this year and then the next 2 years as well. So an average of 26% growth in the S&P 500, or we'll say the Dow Jones, because that's the one he's actually talking about. So when the Dow Jones is going to double 26% a year, it's possible, right? We know, if you've been trading for a while, you know that the NASDAQ moves faster than the Dow Jones, right? It has a higher beta compared to the S&P 500. The S&P moves a little faster generally than the Dow Jones. So he's saying the Dow Jones is going to double. To me, that would kind of say, hey, gee, the NASDAQ's going to do even more than that, and the S&P is going to do a little bit less than the NASDAQ probably, right? Now, this just comes out of him saying, based on what he's doing with his tariffs, okay, and it's driven by his national security, whatever he's done for national security. I'm not going to get into politics here, but he's also saying it's driven by his great tariffs. Now, evaluate that on your own. I'm going to look at the actual world of stocks and see how it plays out there, how likely this is. So let's just start with the new chairman that's coming in, right? So the new chairman, Trump, saying he was going to appoint, or I don't know how far along they are with that, but he's supposed to be known for coming in and he's supposed to be cutting interest rates. So if you've been studying the market at all for any point in time, you learn that when interest rates are cut, that spurs the market usually in upward position. And that's generally because companies can borrow money at less cost, thus making their bottom line more healthier, which then pushes up the stock price, right? It also leads to more expansion because smaller companies who are kind of restricted by debt can get restructure debt or get new debt to grow their companies more effectively because the interest rate is lower, thus again giving them better profits in their bottom line and then again pushing their stock prices up higher, right? So that's one reason that the market's probably going to go up in the near term is because interest rates are going to get cut, right? So that's going to drive prices higher by default. Whenever interest rates come down, stock prices go up. That's a general accepted rule of the stock market. Okay, it doesn't mean it's absolute. It doesn't mean there's not going to be crashes and all kinds of different movement because of a lot of other things in the market. It just says in general, when interest rates go down, stock prices go up. Okay, there's number one. Now let's look at number two, printing money. Now, the Federal Reserve is committed back in July of last year to start printing money again. Now, you can just Google it and go here if you want. Federal Reserve government, federalreserve.gov, payment center, and look at their plans. And they're pumping, again, billions of dollars into the system to do it. You know, they're saying they're doing it for a variety of reasons. But at the end of the day, here's all that matters to me as a stock trader. When they're pumping money into the system, that is inflating the money supply, right? That's really the definition of inflation. They're creating inflation deliberately. You're taking, $30 trillion of money supply and you're adding another 10 trillion to it. You're inflating the supply of money, therefore devaluing each dollar. There's more of them now, so each one's worth less. And therefore, everything you buy is higher in price, right? Because a dollar is worth less. So that pushes up gold and silver prices. That pushes up real estate prices. That pushes up stock prices, right? Stocks are an asset class that will go up when inflation goes up. So they're inflating the money supply. More money is coming into the system. By default, a percentage of that money in the system is going to trickle into the stock market, push stock prices higher. Now, it's not saying that the market's not going to crash. It's not going to dip. It's not going to do a lot of movement. Sure, it's always going to do that. That's the way the market runs. But in general, they're inflating the money supply. They're going to inflate the markets as well. And all the asset classes that are affected by the money supply being inflated, okay? That's number two. Let's look at one more. This is a big one, in my opinion, right? And I could be wrong. And there's a lot of different opinions on the AI boom and how it's going to play out. But I think it's here to stay. I do believe it's going to change a lot of things in productivity and profits. And I think it's going to be an absolute driving force to make the stock market go higher over time. Right now, whether it's going to make it go up 26% per year on the Dow Jones Industrial, that's a pretty tall order. But I think it is possible. I don't think Trump is that far off by stating that. And he's putting himself out there. I know he doesn't care. He'll say anything, and that's fine. I'll say anything too if I feel it. And this is what I feel. I feel it's likely. I really feel it's likely. Now, how do you want to play that? Well, a lot of people, with all that said, all right, let's just move on for now and say, okay, that's what he's predicting. I'm saying I could see how that could happen. I'm not predicting it, but I'm saying it could happen. How would we want to play that if it does? Let's be smart here. I'm going to go to the Dow Jones ETF, the DIA. All right, this tracks the Dow Jones Industrial Average Index. Now I'm just going to look at the history of it, right? So if the market's going to go up double from where it is right now, let's go back in history and to see what that would look like to double it from the past. So that means we have to go down to 250 from where it's at right now. So I'm going to draw a line right there, right? Let's just take a look. And I haven't done a pre-analysis on this yet. I'm doing it right now on the fly as I talk to you. So I'm going to draw this line right here at 250. We're going to say, okay, now from here to here was double, right? So let's draw a line there. And we're just going to say from right here to right here was double. We're going to go right before it, okay? We'll go right here. So that's right before the COVID crash. So from the COVID crash until now, the market has doubled. Believe it or not, right? It was 2020. It took 6 years for the Dow Jones to double from right before the COVID crash back in January of 2020. All right, so it took 6 years. Now, Trump's saying that can happen in 3. And I'm saying the Federal Reserve is pumping a lot of money into the system. Well, they've always been pumping money into the system. That's why everything keeps going up in price, no matter what they say about trying to fight inflation. They're deliberately inflating the money supply, and it's driving prices up. So take that for what you want. But they've always been putting money in, so it's always pushed the market up. And as you can see, it's gone up over the last 6 years. It's doubled. All right, now let's go to interest rates. Well, those do make a difference. When they raise them, the market should come down because now bottom lines on companies in the Dow Jones Industrial Average are being hurt. They're making less money. And now smaller companies and other averages of the indexes cannot borrow money as cheaply, so they can't expand as quickly, which causes other indexes in the market, like the small cap, the Russell 2000, it goes up less when interest rates are high. It affects them more so than it does the Dow Jones. So it is a direct catalyst. When interest rates go down, the market will go up, okay? Do interest rates always go down? No. Will they go down for the next 3 years? That's an unknown. But Trump's bringing in a guy who's going to lower them for the short term. We know that well, we don't know that for certain, but we know that's what they're saying for certain. We'll see how it plays out. But what would we want to do from there? Well, we're going to ride this market and to take advantage if you think it's going to go up potentially that much. And I think it has a chance. We'll see in 3 years, but I think it has a chance. And if it doesn't make double, I think it's still going to go up a lot because mainly of the AI boom that's going to come into this market just push things through the roof. I mean, the money being spent by companies like Meta and Amazon and Oracle or OpenAI and hiring companies like Oracle to build all these data centers, they're really going to change the landscape of the world in the next handful of years, and it's going to be a big impact. So it's a possibility. So how would we play it? Well, we would want to go long the market, right? And if you follow this channel at all, you know I'm always saying long the market because the SPY has upward drift. Well, so does the Dow Jones Industrial Average. It has upward drift. Okay, that means it always goes up. All right, so if you look at the 2020 crash, right? Yeah, the Dow Jones went down, but it recovered. And then again in 2022, it cycled back down, right? Another decline phase, but it recovered, right? And here we are now at another tipping point potentially for the market to come back into a crash phase, right? Now, again, if you want to know how to read these phases of the market, I have a free guide. You can download it. It's at the top of the description, right? It'll tell you how each one of these phases works and what to do during each one, right? But right now, we're looking at what is next here. Now, whether the market's going to go up double in the next 3 years or not, we want to know how we're going to play it. Well, the smart person is going to play it by playing it the upward drift, right? And that means I wouldn't be shorting this market. I get a lot of people ask me, do you ever short the market? Do you ever buy any instruments to play it to the downside? And I'm telling you the truth, right now I don't, but I did in the past, right? I've been trading for 30 years. I pretty much tried everything. And shorting is a difficult game. And the reason is the market tells us it always goes up over time, right? But it doesn't always go down over time. Like right now, I'm projecting that it's going to go down. The next phase of the market is down, but no one knows when. I don't know when it's going to go down. Nobody knows when. I mean, maybe there are some people in this world that know when, but people like you and I don't know, right? So we just know it's going to go down. And then when it does, we know it's going to come back up eventually because it always has since the history of the stock market, right? It always has recovered. So we know when it goes down, it's going to recover, but we don't know that when it goes up, it's going to come down, right? It could never come to this level again. So that's something you got to take into account when you think about shorting, right? Do I really want to play the short side of an instrument that always goes up and has proven through history, the history of the stock market, that it always goes up? Do I want to go ahead and start making plays that it's going to go down? Now you can, right? And that's swing trading. And I used to swing trade a lot, right? But I'm not, now I'm an investor. I learned investing and managing the position, rotating your positions based on risk and leverage makes you way more money with way less work than swing trading or day trading or position trading or any other type of trading, right? Now, you can still go out and swing trade. It's a lot of fun sometimes. You make some big payoffs, right? And then you have some big losses to go with it. And that's the downside of it. But I trade a structure. I get into market. When the market crashes, I take advantage of it. When it's going up rapidly, I take advantage of it. When it's topping out like it is right now, there's positions and there's techniques that I do to take advantage of that. And you're welcome to do all those as well. Again, I have a free guide. You can download it. It shows you all the different phases and how to play them, right? And everybody has their own way of playing them. What would someone be doing right now? Well, let's just go look at this Dow Jones. Well, if you own the Dow Jones right now, I'll tell you what I'm doing right now. I own the SPY, and I'm going to go over to the SPY and show you. And right now I own it, and I've owned it for a long time. I'm selling covered calls on it, right? And I'm selling covered calls on it because I believe the next wave is down. And I'm selling covered calls up here because I don't believe I'm going to get called out, right? Selling covered calls way up here because I think the market's going to go down and I'm not going to get called out. I don't want to get called out. I want to continue to own my SPY, continue to collect my dividend, continue to harvest that gain without paying taxes on it. So I don't want to get called out, right? So now is a really good time to be selling covered calls on positions that you already own, in my opinion, right? I would never buy a position right here to sell a covered call. Why? Because I think the market's going down. I wouldn't buy a position here, sell a covered call when you think the market's going down. That's just not a good profitable play. Okay, but that's a good way to play the market right now as a cover call seller against your long-term positions, right? And then you would wait for it to come down. And when it gets down to this area, then you would maybe sell some of that SPY and buy some leverage product to ride back up, right? That's the way I play the markets. And it's a really good way. It makes a lot of money. You could do the same thing. But I wouldn't just go put all my money into the market right here and buy a leverage product and say, gee, it's going to go up for the next 3 years because President Trump said so, and I'm going to make a ton of money. Now, that might work, but I would never do it, right? I would never do that. But getting back to my original question, I said, well, how do you play the short side? Well, you trade it, right? And some people do that by buying short index ETFs, right? A short index ETF, going back to the Dow, it would be an SDOW, right? SDOW, short Dow. So you're shorting the Dow. What would you do? Well, you'd buy this ETF that shorts the Dow. So when the Dow Jones goes down, this would go up. Now, if you look at the history of this thing, that's why I say, why would you short the market? I mean, it just goes up, up, and up. And if you're shorting it, you're going to go down, down, and down. You're going against the trend, right? You're going against the current of the river. Why would you want to swim against the current? Go the easy way, right? Just buy the Dow Jones and go with it. That is the easy way to make money. And then when it comes down like this, you leverage up and you take it higher because you know it's going to go higher. You never know if it's going to go lower. No one says that, hey, this thing's always gone lower, over time, all you got to do is wait it out because it just doesn't happen, right? It always goes up over time. So that's why you always want to play it to the upside. That's why I do not do any shorting strategies right now. If you want to short it, you can swing trade. Swing trading is a whole different game. Maybe I'll make some videos on how to swing trade it and go short. I wouldn't even do that. Even though my swing trades are to the long side. I wait for it to pull back and I buy it and it goes up. I wait for it to pull back and I buy it and it goes up. Why is that? Because I know it's always going to go up, right? I just don't play the market to the short side. So I hope that makes sense to you. Not everybody has to agree with it. I know people love to trade the markets. When I was younger, I loved trading markets too. It's very exciting, right? And you can make a lot of money. I made a lot of money in one day, 1 hour sometimes, but then you lose a lot of money. So it's an exciting type of trading. It's different than what I'm doing now. What I'm doing now, I'm telling you, my experience is way more profitable than any other trading style I've tested. I've read a lot of books. I've been through a lot of courses actually. I used to, back in my day, you had to go to an area and sit through courses for 4 hours a day and then get a little certificate that says you graduated from this course and you are now a stock trader, and you still didn't know shit about the market. I mean, they just taught you what everything was. They didn't actually teach you how it works. You got to figure that out through experience, and I'm sharing my experience with you right now. I'm putting it in a document for you. You're welcome to download it for free, and I hope it helps you. And that's all I got today. All right. Thanks for tuning in. I'll talk to you soon.